Hey, what's going on, guys? Today I want to talk about how, the stock market is a wonderful place that anyone can buy passive income. That's a very popular term out there, passive income, and especially in today's time. Everyone wants to, be making money, not working the typical 9 to 5 and sitting on a beach somewhere, just collecting those paychecks every month. Now, you know, for me personally, I don't think that is what I find would ultimately like find enjoyment in life. Like I want a challenge. I want a career. I want to be. Even if I'm not working a typical 9 to 5, like I want to have like a business I'm working on, or like a charity, or something bigger that I'm working towards and progressing. Because I feel like that's when I get the most fulfillment in life, when I'm challenging myself. When I'm growing every day, I'm grinding. Obviously there's levels to that. Like I don't want to be like in the hustle culture like it is very popular today. We're just grind 7 days a week. I want to balance, but I do want to be challenged. So with all that being said, this video I'm going to talk about how anyone can buy quote unquote passive income in the stock market. But there is one disclaimer that's going to come with that. And in order to purchase passive income, it's going to cost something, right? So like if you buy a stock that pays a dividend, it's going to cost something. So you're giving up that potential. It's just like it's an opportunity cost, right? So like you can go buy AT&T. A lot of people, or actually one even better, QILD, right? Like people, and even disclaimer, even me in the past, like I used to be a big fan of this, but my mindset has definitely shifted after looking at the performance over the long term. And for me, like the yield, this is not right. Yahoo Finance is letting me down this morning, but their yield is very high. But with that being said, their expense ratio is a little bit higher, and their overall performance has been decreasing quite a lot. So, yeah, quote unquote, you can get passive income, but it's going to be at a cost, right? So that's why, I don't, I always tell people don't chase yield unless you absolutely have to have the income. If you're close to retirement and you need, 6, 7% yield, then yeah, that's fine. But even, how sustainable is that long term? For me, I like a mixture. I like dividend growth because it's 1, 2% dividend yield, but that dividend growth is exponentially. So I'm trying to think of one. So VIG, I think, yeah, it's a dividend appreciation index fund. So let's look at some of the holdings that they have. Yeah, so for example, I mean, Coke's not that. I don't think they're a big dividend grower, but Johnson Johnson is. JP Morgan is. So their yield, these yields aren't really big. What's the? I think this is probably less than 2%. Okay, 2.89%. Go back here, but but uh but yeah. So I personally, for my investment plan, I like stocks that have a lower yield, but their performance and their upside is much higher, right? So like a lot of these higher yielding stocks, like AT&T for an example. Sorry, I don't mean to be hating on AT&T. I think they're actually starting to turn some things around. Selling off some of their batter investments and stuff like that. But they're in a great example where their performance has not been great, but their yield was high, so they sucked a lot of people in, attracting investors with that high yield. But unfortunately, the performance has definitely lagged the market. It actually is up since 1983, so that's good. But yeah, so I guess the purpose of this video, I was talking about passive income and how anyone can buy it. But be careful because you don't want to get into a yield trap, right? I think the stock market is a great place. You can buy. Index funds are great. SPY is more of a growth. Overall performance ETF. It's performed really well. You're not going to get much dividends from SPY, right? It's like 1.94%. A little bit better of that if you want like a dividend ETF. SCHD has been a very popular one. It seems like across the investing world today. It's performed really well, and the yield is very competitive there. Very nice expense ratio, very low there, and its beta is a little bit less, so the volatility isn't going to be as high with this, and that's because they're holding more blue chip companies, more stable, not as volatile stocks, and that makes total sense there. But yeah, I think a mixture of both is good. Individual stocks and ETFs / mutual funds. That's at least my philosophy so far. That might change as I go along and have less time to actively manage stocks and stuff like that. But the cool thing about individual stocks is you can create a consistent, not quote unquote consistent, but stocks pay out on different months. So like January, February, March, April, whereas ETFs typically only pay quarterly. Now there are some that pay monthly. I'm trying to think of some popular ones that pay monthly, like DIVO. This is an interesting fund. I'm kind of indifferent about that. I mean, it's a pretty decent yield. I still don't think Yahoo Finance's yield is correct. That seems a little low. I was expecting more of like a 3 or 4% yield, and maybe because this market, the yield is getting out of whack a little bit. But this fund, they invest in dividend growth stocks, but they also sell covered calls on some of their positions as well. So just, I read their report the other day, kind of describing their philosophy with it. Profile maybe. Yeah, I don't think they're going to describe what they do in here, but on their website, they talk about how they like to find companies that pay 1, 2, 3% dividend yield and then leverage that with covered calls. So which I think that's a great philosophy. And I kind of like doing that, in my portfolio too, on the individual holdings, get 100 shares of, each of them, or, get close to it. And then start selling covered calls against, just to amplify the income a little bit. And it's kind of funny that that's what this fund manager is called, amplified CWP enhanced dividend income ETF. But yeah, like I was saying, I think Divo actually pays every month, but like most of the time much other ETFs pay quarterly. So like if you're wanting like a consistent income, it's going to be a little bit harder to do that because it's quarterly. But whereas like if you buy like a Realty Income, everybody loves Realty Income. They pay out monthly, but you can construct different stocks. Look it up on the internet. I've made some videos in the past where like McDonald's pays 1 month and Starbucks pays this month, and then Johnson & Johnson pays this month. So you can construct it and get a couple stocks, and then that way build up those positions, and you could get a monthly income stream per se there. So just some different thoughts. But yeah, the main part of this video, I want to talk about how anyone can buy passive income, and just do remember that the cost of passive income could be costing you longer, or could be costing you more over the long term, right? So like, for example, Realty Income, everybody loves, not everybody, but a lot of people love this stock, and a big part of that's because they pay a monthly dividend. They're paying 4.78%, so pretty high, but the performance, Yahoo Finance, I should have used another website because they're not the greatest display here, but the performance, it could have, let me just say, like if you could have invested into like an Apple or a Microsoft or like the NASDAQ 100 or the S&P 500, yeah, you're getting passive income today, but if instead you would have focused on growth, your portfolio could have 10x'd, the performance of Realty Income or AT&T or some of these other higher dividend paying stocks. So then in 10, 20 years, your portfolio is sitting at $1 million instead of, $500,000. So that's just some things you have to, investing, you have to understand that, right? So like normally you want growth, you want income, they're typically you're not going to get both of them. Dividend growth stocks are the example that, you know, you can get both. You can get income and you can get, you know, growth. However, a lot of people argue like if you're not gonna use the income today, then why are you focusing on dividend paying stocks? Because you could invest into, you know, stocks that don't pay a dividend. So just a lot of different things there, but you know, I'm indifferent about, you know, buying quote unquote passive income just because, you know, I'm at my age and my time horizon and my risk tolerance. You know, I want growth. I want aggressive growth. You know, I want portfolio exponential. Like I want my portfolio to grow the most that it possibly can over the next 20 or 30 years. Right now, you know, like I have a 9 to 5 job and, you know, I enjoy it. But, you know, ultimately I think I'll try to own my own business. And at that point, you know, I'll be able to, you know, hopefully, you know, tap into my portfolio a little bit via, you know, options or dividends to just supplement my income a little bit. But as of now, yeah, I don't plan on exiting the workforce. Obviously, I can't yet. I'm not in that position to do that yet. But yeah, so, you know, I hope this got some type of value from it. I know I'm kind of rambling on at this point, but just wanted to talk about, you know, just the mindset that you have when investing into the stock market. You know, you have to look at growth, you have to look at value, you have to look at, you know, there's a lot of different things you have to consider. And sometimes you need to step back and like, look, man, like, why am I chasing these high dividend yield stocks? Is it for, like, if I'm not going to use it within the next 3 or 4 years, it may be more beneficial to focus on more of a growth style portfolio. But yeah, so let me know what you think down below. I'm curious to hear your guys' insight and what you guys are, you know, focusing on when investing into the stock market. I would love to hear back from you guys and see where you guys are at and see if, you know, I'm losing my mind here or if you guys kind of agree with my stance on this. So that's it for the video. Please like and subscribe down below.